we'll see. So I think today I'm going to carry on with inverses a little bit, and then I'm also going to be talking about displacement, like the displacement with highs and lows, and how I rate a setup depending on the displacement and using the inverses, so kind of all combined. So in our first example, we turn on view out. No, I'm saying, all right. So I'm just gonna go over Friday. Friday was a very, very good example. Okay, so one thing I always look for, and I've been starting to kind of look for, is like candle closes. Okay, and I know ICT says, oh, wicks can, you should look for wicks too because wicks matter. Okay, but like candle closes over swing highs and swing lows are low-key underrated, something, and like inverses. So we obviously know in like this example right here, okay, you kind of got my exact model here I teach, right? You sweep sell side, and once this is kind of violated right here, right, you see this close above, okay, you should expect this to be used as an inverse back to the next high, which would be right here, and then right here for the final target. So pretty textbook example from everything I've been teaching the last couple weeks. Okay, we know the inverse. We know the inverse. When we close above, we look to use this exactly like support, trend, and resistance, except this is actually meaningful support and resistance, right? We know this is actually an inefficiency as support and resistance. So this is the basic model right here. We take sell side, and this example is kind of a little interesting. So I always say only use a singular inverse, and on this leg in particular, see how there's an inverse here, there's an inverse here, right? So there's three. So that's why, like, yes, you can still look for a lower time frame setup here, but the most confident setup is when we break this one, because we broke all three at this point. Now this is the highest one. This should be used as the inverse. And a lot of people ask me, they're like, well, how much displacement do you expect, or do you want to see over an inverse? Okay, there's no set rule. Okay, it's kind of the signature and like what I've seen in the past. I would say anything like this, so anything like, I don't even know, like this, I would consider good displacement. So like even if a body closed down here, but if you see a body that closes like down here, like yes, it still is technically closed below, and yes, we will probably go higher. But the closer we close to the inverse, the less confident it's going to be. You really ideally want to see like a close up here at least. Okay, like this is a good, and I'm kind of just eyeing this out. So really anything from here and then onwards. So you're going to see like this particular setup, right? It's my textbook model I always teach. We inverse all three of these, okay? Raptor, the order block does not matter in this situation because the fair value gap was inversed and we took sell side. So if we took sell side, would you really expect this order block to work? Yes or no? Right? Pretend this is a 1 minute chart and we just took this low. Would you expect this order block to work? Right? I know this is a 5 minute, but pretend if it was like a 1 minute or 30 second. I'll explain in a second, Landa. Okay, exactly. So no, you would not. So really this shouldn't matter, even though it is an order block, because we took the low. Let's say we did not take the low, then yeah, this probably wouldn't be a good setup because this is an order block. Okay, but because we did, you just got to know the market will be expected to break it because it is on the sell side of the curve. And this is the 5 minute setup. You guys got to realize this is the 5 minute setup, okay? Do you guys understand there is a 1 minute setup down here? I'm only going over the 5 minutes. So the 5 minute textbook setup, anyone who will not go below the 5 minute time frame, this is the setup, okay? If you're a 1 minute trader, you would have been in before. So you can see there's a setup right here, and it was actually much cleaner in ES. And there was a setup right here, kind of inverse lined up with this, okay? So this is kind of the earlier setup in the lower time frame. This is just the 5 minute setup. Okay, does everyone understand that? And I call this a low risk buy. It might not always be like high probability, but this is just to me a low risk buy because it's not bad, the risk reward. This one in particular, the stop loss is kind of big, but typically the first ones are kind of the first low risk buy, and then the second leg or the second fair value gap we get, that's known as the second stage of the accumulation, and that's usually the high probability one right here. But let's say you're only trading the 5 minute, because I know some people in here will not go to the 1 minute. This is the good setup, okay? There was a setup on the 1 minute time frame. I do get that, but if you're trading 5 minute, this is the setup you'll take right here. Okay, so it really depends on the time frame you're trading. Do you understand that, Landa? And I'm a 1 minute trader, so I actually longed down here when we got it, and then I scale some here just in case, and then I just try to hold the rest of the highs, right? Because in live time, this is just a good scale spot just in case I'm wrong about the bias. Yeah, I know, bro. People who do not trade the 1 minute, they're like, oh, why do you trade the 1 minute? I think the 1 minute's fire. I'm just saying, like, this was the 5 minute setup. Okay, the 1 minute setup was obviously much lower. And again, I'm talking about, I think I want to emphasize body closes here. So what's the difference between like the body close of this versus what's the difference of this? Yeah, the wick is a stop run. And yeah, 1 minute is definitely for more seasoned traders. The 5 minute is for if you're still learning. So the answer to that question is this one's a strong body close. We wake above, but we also close above. This one just wicks below. Okay, and let's say, okay, so let's say we have sell side here. See how the 1 minute closes below? Okay, you're going to see, okay, if I go on the replay, the 1 minute close below. Make note of that. So I'm making note of this. This is not bullish to me. I'm going over a couple candles, and maybe I'm like, okay, let me see where the 5 minute closes, right? Maybe I go over a couple candles. Okay, this right here. Let's say I just start looking at the chart, and the 5 minute candle just closed. What do you notice about this 5 minute candle? What do you notice about this 5 minute candle? In hindsight, okay, in hindsight, keep in mind this is not live time. On this wick, what would this wick tell you? What would this wick tell you in live time? What do you? Yeah, exactly. If I come to the charts and let's say I didn't turtle soup this, let's say I didn't long this at all, and I come to the charts on this candle, is there still an opportunity to long? Yes, there is, because I'm seeing in hindsight, we wicked below, but we barely went below. So when I say like I predict stuff live time, this is what I'm talking about. Like I'll see it happen live time, and I'll be like, okay, well we swept. See how there's no displacement, there's no close below, and we're all the way back up here again. So now in hindsight, I'm like, okay, well now I'll look for a 1 minute setup, which would be this inverse. Okay, which did not play out as clean as I thought it would. And depending on your stop, I know some people would get stopped at this, but it's still not a bad setup, okay? But like for this example right here, a lot of people think, oh, if you miss this live time, you're not going to catch a setup. But if I'm coming to my chart and I see this and I go on the 1 minute after, I'm like, okay, well, I saw this in hindsight. Now I'm going to look for a setup and then I'll play something, right? So along this maybe. Okay, and then I'll look for a second setup along this inverse maybe. Right here, you can see it was a little sloppy, but then we created a bearish fair value gap turned into an inverse again. So like on this candle close, I could have gotten in, and then you just target the next high before fair value gaps or fair value gaps, right? We know ICT talks about something like this is a speed bump, okay? This is an example of a speed bump. You can see your rejection right here, okay, and we go all the way down 40 points. So if someone was trailing to stop, they would have been stopped. And let's say it did get down here in 1 minute. This is exactly why I don't trail my stop. Yes, I am very tired. I've been doing a ton of stuff today. This is a prime example of why I don't trail my stop, because like I know we're probably going to go over this, but I will not trail because for all you know, this could happen right here, and you just wouldn't expect it, and then you get stopped down and we rip. That's why I don't like trailing my stop. But Once it's a break even, it's a break even. And like same thing with up here. Okay, if we look at the 5 minute, it looks like the 5 minute close above. But like if we go to the 15 minute, all this was a wick above into a fair value gap to the left, right? So like if we're coming in the chart in hindsight and we see, okay, in hindsight we just rejected here. Okay, where should the target be? The target should be sell side. Okay, and you look for the model I always teach. So you look for some sort of bullish fair value gap to be broken. So you can see we get it here, and then you look for that to be used as an inverse. Okay, and I know it sounds weird. You look for a bullish fair value gap if you're bearish, but those bullish fair value gaps, man, I'm telling you, if you're bearish and you get one of those and they're violated, like that's the perfect short setup. Aiden, I'll invite. I don't even have my headphones on. I'm not gonna lie, so I won't be able to hear you if you say something. I mean, I can invite you if you want, but there's really no point. So again, like if I came to the chart, saw we only wicked above this in the 15 minute, and then I'm looking at the 5, like, do you really think a wick is telling me this is bullish? Probably not, right? There's barely any displacement above this. So now I'm looking for like a displacement with an inverse for like this setup. Okay, and that just, the power of what I'm trying to show you is a lot of people say, oh, that's hindsight. You can still see something in hindsight and still bank on like another setup. That's what I'm trying to show you guys. Like the reason my win rate's so high is because I never take the first long. I always take the second long. So I'm never going to be the guy longing this after he takes sell side, because sometimes these fail and people wonder why. I'm always the one taking the second setup, and they typically work. And then that's where I look for like my model, my inverses, whatever. Another thing I want to point out is on Thursday in the morning I said this is going to determine my bias today, meaning if we were below it I was going to be bearish, but if we broke it I was going to be bullish. And you can't do this every day. Sorry, I'm yawning. You can't do this every day because there's going to be days where there's no fair value gaps or there's not clean fair value gaps. But if you're looking at the 1 hour, 4 hour, and you see like a single fair value gap, that's literally the only thing I'll use for bias for the day. So let's say this is like multiple fair value gaps, I probably wouldn't touch it. But it was a singular fair value gap, so it's just something I'm interested in. Here's what I was going to say. People get a bit obsessed with taking liquidity sweeps even when the draw is so clear. They feel like they have to wait for liquidity to be swept. Learning just to attack the draw has been super helpful. Yeah, I always attack the draw. I mean, there's two different ways you can look at ICT. There's the way where, okay, you're checking the daily. You look for the daily high and low, which would be right here and right here. Okay. And now when you have the daily high and low, what people will do is they'll be like, they'll see the open and they'll be like, okay, what's order flow, right? What's order flow? Are we creating bullish structure, bearish structure? And they'll kind of go with whichever one they see. Like you can see we have a previous day high up here and they see bullish order flow. So they'll be like, I know we have a low of day down here from yesterday, but the order flow looks like it wants to go to this high. So I'm going to go with the order flow and try to go for the high. That's one way of trading ICT. The other way is not going for any of these at all, so not going for either of these green lines, and then just waiting for one of them to hit and then look the opposite way. And I don't like that way because you definitely lose a lot of opportunities. I'm the type of person who would be like, okay, I see a previous day high and low. What is the order flow telling me now? And I'll kind of go in that direction. And I'll just attack the liquidity. On days without a fair value gap, how do you determine the bias? Or I just go to the lower time frame. There's always going to be lower. If there's not a fair value gap in the 1 hour, I guarantee you there's a fair value gap on like 15 minute or 5 minute. Okay, and you can use that for the bias. Like if I go to the 15 minute, there's plenty of fair value gaps. There's this one right here, this one right here, right? There's plenty. So if I don't see anything in the higher time frame, I'll just go lower time frame. And if you are going from a higher time frame to lower time frame, that obviously means you got to lower your targets. But like if there's not a fair value gap in the hourly, I just take smaller and faster plays on like the lower time frame. Makes sense during the second setup where ICT. Yes, the second distribution stage in MMXM is why my win rate's so high, because it typically works. Oh, good luck with your camel, buddy. That's funny. We often only hit the high or low, not both. Hence why I only play to it. Yep, I totally agree. And if you know anything about the strat, they always say like, oh, if we break a low, for example, we should go to the next low. If we break that low, we should go to the next low. So that's why it works so well. But you just need to know what order flow is on the smaller time frame. And by order flow, I mean like, are we holding fair value gaps to the bullish side or bearish side? Are we creating bearish order blocks? Like this candle right here, once this candle's low gets traded below, you'd be like, okay, well, I know this is an order block now, meaning order flow is probably going to be bearish. That's what I mean by order flow. I do not mean looking at the book. My win rate is probably, my overall win rate ever is probably like 75%. In the last like 5 months, probably close to 90. Yeah, so again, like the other way of trading ICT is just marking out the previous day high and low, seeing which way order flow wants to go. Like just, this is a good example right here, right? If I go inside the daily candle, I'd probably see bearish order flow. I'd see bearish fair value gaps getting created. I'd see the respection. I'd see bearish fair value gaps getting respected, and I'd also see we're gearing towards the low. So I'm like, okay, well that should be the drawn liquidity, right? It sounds really simple, and there will be days where you think that, and then we totally reverse to the other side. But you got to be smart and know when that's going to happen, or just like you got to know the day of the week. For example, so sometimes when you think, okay, we're going to the low and order flow is bearish, that's your Judas swing. And people don't understand that, and it's a Thursday. Thursday is a typical day where we do a lot of reversals. Like, not every single Thursday, but a lot of Thursdays it's a reversal day. So you just got to be mindful, okay, what day of the week is it? Did we put in a high or low on Tuesday or Wednesday, right? So stuff like that, all along with, okay, what's the order from the smaller time frame? And let's say you did see bearish order flow going towards the low, you're going to say, okay, well, I think the draw is down here because I just saw a bearish fair value gap get respected, right? But you're not always going to be right about that. But you're going to be right the majority of the time that happens. You're not going to be right 100% of the time it happens, but if you see bearish order flow going towards the low, we're probably going to go to that low, okay? And I would say we hit that low 80% of the time. 90% win rate. When I put $1 million on a trade, I'm on the edge of profitability, but my win rate is like 40%. You just have good risk management. Are you using ICT? If you're using ICT, your win rate should probably be much higher. If you're good at risk management and you do not know ICT, that's like perfect for you, because once you learn ICT, you can really up that win rate. Inverse fair value gaps is also why I have a high win rate, because if a fair value gap doesn't work one way, should it work the other way? In theory, yes. Okay, it doesn't every time, but in theory, if it's violated, it usually goes the other way. Okay, not 100% of the time, but that's why I love them. It doesn't matter how much ICT knowledge you have. It just matters if you can get like a nice model from them, and then just keep sticking to that model. What time frame would the bearish order flow be on to target the low? Like, I would say the 5 minutes. So let's say we were in replay mode and I saw this happen, okay? In hindsight, I see this happen. I'd be like, okay, well, I come to the chart and I just saw this inversion respected and I just saw a bearish order block created. So with my rocket science brain and my super smart brain, I'm going to guess, well, the market probably wants to go this low. Okay, the market's probably not going to stop in the middle of nowhere, but ideally the market's going to go for this low, and that's literally how I determine the draw on liquidity. I look for an obvious daily high or low wherever order flow is going, and 80% of the time we will continue down to that low. Right? I know it sounds simple, but there's retail who tries looking for reversals all the way down, and then we just keep going down. And then finally, when we hit this low, they're like, oh, we're going to dump, and that's when we reverse. So the logic with how I look for withdrawal and liquidity makes sense. So you're going to join, you've never heard anyone talk about inverse rate value against previous day highs and lows and order flow going into the day for bias like you do. Heard people talk about it, but not use it, so I'm going to join premium and trade with you guys this week. Alright, sounds good to me, man. You do not have to join premium if you don't want. I do free classes every Sunday night. But again, let's say, so I played Minecraft this week. If you didn't see me in the call, I was in the Minecraft call a lot. Let's say I was playing Minecraft, okay? I know it's a dumb example, but let's say I was playing Minecraft, I came back to the chart, and I saw this on my screen. Well, I'd be like, okay, well, this was expected. Now I'm going to go to the 1 minute, see if I can, and try to hop on the train and take a short down to here, right? So, like, even though I don't catch this in live time, there's still an opportunity to be like, okay, well, let me see if I can hop on the train here. Okay, right here, bearish fair value gap. I'm putting a limit right there, okay? I've just come back from playing video games, whatever I was doing. I put a limit here, and now I'm targeting low. Something like that, just simple, right? I don't have to catch this. I can come back in hindsight and be like, okay, well, the order flow is bearish and we have an obvious low down here. It's probably where we're going, so I'll just hop on the train, get in, okay, and that's what I do. Yeah, we're playing tonight. If anyone wants to play, just let me know. But again, a lot of people think, like, oh, you can't short this, we're in discount. But if we're getting displacement, like right here, for example, again, I love the body closes. Like, even this body closes way under. That's very bearish to me. Even this one right here. Okay, this body closes way under here. Yeah, Aiden, I heard you the other day. You guys got on. Let Aiden talk. I don't have my headphones in. I would let him talk, but I can't. I won't be able to hear him. Breaker to the left. So I don't like talking about breakers, but I would say this right here is a breaker block. These three red candles. This is a bearish breaker. We never actually hit it, but look at YM on the daily. YM on the daily from May 16th to June. From right here to over here. What about it? Oh, candle closes. Yeah, I get what you're saying. Like, this candle closed way above the swing high. Right, we just kept going higher. Even this one right here, you can see we wicked up a few times, and then finally, like after we finally close above it, we just rip. This one right here, see how like we didn't close under this, and you can just clearly see what happened. Like if I came on right here and I was on the daily chart and I come back the next day and I see this candle form, like I'm like, okay, well yesterday was a whole stop punt. Today should be bullish, right? Even though I may have missed all yesterday, we know it was a stop punt yesterday. In hindsight, today should now reverse. So that's like, and then you catch the next move, obviously. What am I thinking weekly bias wise? Low key, it's all going to depend on this. So I teach inversions and I teach how to create conditions. This is my condition right now, okay? If we get a nice bounce tomorrow, I'll be bullish. If we close below this on the daily, I'll be bearish. So this is my condition. My condition is all based off this one fair value gap all week, and it's going to determine the bias. So I'll start tomorrow by going to tomorrow and looking for lower time frame longs because we just had a giant dump. Longing would be better down here. We know we're in a daily fair value gap. So I'm probably going to start with being bullish tomorrow. But the second this gets violated, we know what the bias is. Yeah, I'm doing my trading tomorrow. Yes, I live trade every day. Yes, I am, Aiden. So again, just the importance in paying attention to, okay, do we wick above? Do we close above? If we do close above, how much is it? Note every single close and wick above you see, because I guarantee you when you start seeing stuff like this, you will memorize, okay, last time something like this happened, we reversed. Like, you'll memorize these little signature patterns, and they just work so well. Like, just there's stuff in price I just memorize just because I've seen it before, and you kind of know like what's going to happen. On weekly NQ, you buy the fair value gap. So whenever there's a fair value gap and an order block combined like this, I call this slippage. So it's kind of like a PD array clump. So if we kind of knife during the day under the screen line to like down here, so let's say we like knife to like right here one day, then I'm expecting us to go 300, 200. I'm expecting us to go 200 points lower to this low. So it still leaves me room with 200 points, but like, again, if there's ever like a fair value gap and an OB, I kind of call this a PD array clump. So it's not bearish yet, okay, but it's starting to look that way. We just got to wait to see tomorrow how we react to this if we get a long setup, because if we get displacement to the upside tomorrow at open in a nice giant fair value gap and we didn't hit like the internal high, I'm definitely longing it because it's definitely a decent spot too. I'm 21 OG. Been started watching trading videos when I was 16, so this is CAD JPY. It looks like we took out this by a tick, but usually when this happens, we end up going back. So assuming CAD JPY is coming down to these lows this week, you can see we rejected a daily fair value gap in hindsight, right? So in hindsight, I see, okay, we rejected a daily fair value gap. Now what do? I go to low time frame. I see if I can maybe hop on the train to short. So like, I put a short limit here, and I'll be like, okay, well, I'm going to try to bring it down here, right? Even though I missed all this, there's still going to be opportunities. When did I start watching ICT? Over a year ago. I usually get on my live at like 8:30 or 9, and I'll take a couple pre-market setups. Plus AV said, if you don't have inverse fair value gap in the directional drawn liquidity, do you typically avoid or have other ways to enter with confidence? If there's not an inverse fair value gap and I see a 2022 model, I'll still enter because that's the original model that we were taught. But I just think it's a more higher win rate if there's an inverse too. Like let's say we inverse this and then we got a bearish fair value gap right here without hitting this low. I'd like enter the retracement and I'd just be more confident versus if this was not a fair value gap and I see a bearish fair value gap here, that's just the basic 2022 model. It's like, okay, it still has a high win rate, but maybe not as high as if there was an inverse. Yeah, I got the 69-minute chart here. You can see we had a 69-minute fair value gap rejection and then another 69 one right here. So, where'd your stop loss be in the example? Yeah, I'd probably do a tight stop loss right here, like above this high, because really, if I was wrong, we would probably trade above this high. But if I was right, like, there's no way we get above this. This is the safe stop loss, and this is the aggressive stop loss. Okay, and I still think this is a good aggressive stop loss, because if I'm right, we should not go above this, but like, if I was really right, why would we even think about trading above this? Right? If I was right about going to here right now, there's no way we should trade above this, and there's no way we should trade above this. So I'll put my stop loss like somewhere like here. Yes, John. How did I go on Twitter? By, I don't even know, man. I just tweet and I get followers. I have no idea. Posted a few educational content. Maybe that's why. I don't really know. I really didn't expect to grow, but I did, so yeah. I think that's about it. You can see like gold, you can see there's a singular fair value gap in gold, inverse right here. Okay, where is order flow? What's the order flow on the higher time frame or on the lower time frame? Order flow is very bullish. We have an order block here. We got almost relative equal highs up here, and based off the hourly and kind of, okay, we're reacting off this inverse, and based on the 5-minute being that we have an order block here and maybe a fair value up here, I know the order flow is bullish, which tells me we're probably going to go to the next high, which is right here. And then I'll look to the left, I'll be like, okay, is there any signature highs? And sure enough, there's a very, very nice obvious high here. So if we hit this high, we should go a little higher. So I would say, okay, this is my confident draw on liquidity right now, based off of order flow, based off the hour inverse. And it's going along for the ride, you know. Does everyone understand how I kind of got that draw on liquidity? Okay, good. And you can see we kind of reacted nicely off this fair value gap, even though I didn't take this. And look at this wick in hindsight. Right? It's a wick in hindsight. Like, even in hindsight, even if you didn't catch this live time, you still know this is bullish just based off this wick. So the draw on liquidity should be here. And yeah. So again, it's very simple how I determine the draw. And I'm not gonna, the market's not gonna be right here. Like, let's say the market was right here. I'm not gonna predict the draw to be like way down here until we're like 60% of the way there, or I see like a giant red candle, right? I'm not just gonna try to make outrageous draw on liquidity call outs and have a lower win rate on draw on liquidity call outs. I'd rather wait till I'm confident when I know what it is. So I kind of wait a little bit. ICT, what he used to do is he used to just have these outrageous draw on liquidity call outs, and you just call them, and typically he was right, and he'd call them based off of nothing. He'd just kind of be anticipating something, but I kind of wait till it's confirmed, and then I'll call the draw on liquidity. But yeah, I think that's gonna be it for right now. I gotta go again. I'm very, very busy right now, so yeah. John Cameron, if it was more body and less wick, would you assume we're still bearish? If there was a body close under this, yeah, I'd probably be more bearish. But there was not, and there was a giant wick wicking back up. So yeah, if there's a body close, it'd probably be a different story. Higher time frames, like anything above the 5-minute is the best for that. Anything below the 5-minute is probably not good to use that logic. It's not as it's not as like accurate. Yes, this is recorded. All right, I think that's it for now. It will be recorded. If you want to play Minecraft later, I'll probably be in voice. You can ask. You can even ask. You can, if I'm in voice in the Minecraft voice chat, and you have a question, just feel free to join and just chat up with me. It's free to everyone. So yeah, I'll see you guys later, and peace out.